Good morning, class 12. As already you people have learnt about the third method of estimating national income, that is the expenditure method, its components, and the measurement of national income using expenditure method. So today in this video, I am going to explain you the precautions which are to be taken while using expenditure method. Well, children, the very first thing which is to be kept in mind while using this method is the expenditure on second-hand good is not to be included. And the reason is the value of this second-hand good has already been included or accounted during the year of their production. Or you can say when these were initially produced and purchased by the final user. Then expenditure on shares and bond is not to be included in the total expenditure, and the reason is that they are not related to the production of final goods and services. Rather, you can say that these shares and bonds are mere paper claims. So such expenditures do not cause any value addition. Then children, apart from this, expenditure on transfer payment by the government like scholarship, old age pension, they are not to be included because transfer payments, children, they do not cause any value addition in the economy. Then apart from this, you people need to know that only final expenditures to be taken into account to avoid any kind of a error like double counting. So expenditure on intermediate goods and services must be avoided. And last but not the least, the imputed value or the estimated value of expenditure on goods, let's say used for self consumption, should be taken into account. And the reason is, children, that these goods of course are reflected in the estimation of GDP. So imputed rent on owner occupied house should be taken into account. So these are few precautions which should be taken while estimating national income by expenditure method. Now let's see how we can estimate or calculate national income by expenditure method. Already people have learnt in the previous video. So here are few more numericals. So let's do them. So the data which has been given over here is that calculate net national product at market price from the following. Now children, the items which have been given over here is closing stock, which is rupees 10 crore. Then we have consumption of fixed capital, which is rupees 40 crore. Then we have private final consumption expenditure, which is rupees 600 crore. Then we have exports, which is rupees 50 crore. Then opening stock, which is 20 crore. Then we have government final consumption expenditure, which is rupees 100 crore. Then imports, which is 60 crore. Net domestic fixed capital formation, which is rupees 80 crore. Then we have net current transfer to abroad, which is minus 10. And then in the last we have net factor income to abroad, which is rupees 30 crore. Now we need to calculate NNP at market price, and here you need to remember to calculate NNP at market price, we need to remember NDP at market price, in which you need to add the net factor income from abroad. So children, here we have taken the very first thing is the private final consumption expenditure, then in which we will be adding the government final consumption expenditure. Then you will be adding the net domestic fixed capital formation. Then you will be adding the change in stock. Now over here you have to be very clear with the thing that when we say change in stock, already you know change in stock means closing stock minus opening stock. So in bracket I have taken closing stock minus opening stock. Then I have taken plus exports, which has been given, and minus import. That is, you people know very well that net export where you add the export because you get the money and you deduct the import. And the last is net minus net factor income to abroad. So children, NNP at market price equals to rupees 600 crore as private final consumption expenditure, in which I have added rupees 100 crore which is government final consumption expenditure. Then I have added rupees 80 crore which is net domestic fixed capital formation. Then I have taken plus change in stock. Now here plus change in stock in bracket I have taken the value of closing stock which is 10 crore and then minus the value of opening stock which is rupees 20 crore. So children, 10 crore minus 20 crore comes to minus 10 crore, right? So when it is minus 10 crore, that means we are going to plus minus will be minus. We are going to deduct this value and then plus export which is rupees 50 crore minus import which is rupees 60 crore. And now it is net factor income to abroad. It is to abroad, so we are deducting the value which is minus rupees 30 crore. And you get a value of rupees 730 crore which is your NNP at market price. Right? Now the another numerical. Here we have to calculate net domestic product at factor cost. That means we need to find out NDP at factor cost. Now in NDP at factor cost, you people know very well that you do not take the value over here of the that is the any of the value of the depreciation. So when we take NDP at factor cost, over here we will keep in mind that we will include all those value which is added up. So the first value which we have over here is the private final consumption expenditure, in which you will be adding, I have taken gross, that is government final consumption expenditure. Then you have added up the net domestic capital formation. Then as it is given net import, so you have deducted the value of net import, that is minus, so minus net imports, and in the last as it is NDP at factor cost, so you know very well that you need to deduct the value of net indirect taxes, so minus net indirect tax. So NDP at factor cost equals to rupees 800 crore as your private final consumption expenditure plus rupees 200 crore as your government final consumption expenditure plus rupees 100 crore as net domestic capital formation. Now over here it is minus net import. Now children, if you see the value of net import, it is minus 20 and already we are deducting the net import. So when it is minus minus, it converts into plus, you know. So here we will be taking at plus rupees 20 crore and minus the net indirect taxes which is rupees 120 crore. So when you calculate it, you get a value of rupees 1000 crore. So children, your NDP at factor cost is rupees 1000 crore. So this is how you can calculate NDP at factor cost. The only thing which you are supposed to remember is again the measurement, that is the measurement of estimating national income by expenditure method.